What is up, Eagle Investors? Welcome to another episode of Eagle Investors Market Recap. In this episode, I'll be doing a deep dive into several themes that I've been following in the markets over the past few weeks. This includes a shift from growth to value, a shift from large cap to small cap, some fiscal stimulus measures that we're seeing come into office, as well as the impact that it might have on specific commodities, including gold as well as silver, and looking into how the US dollar has been performing, as well as several other economic data points that I've been following as well. Before I start, I just wanted to go over the performance of the S&P 500. For the week to date, the S&P 500 is up 1.9%, and for the year to date, the S&P 500 is up over 13.9%. Now, this chart right here shows the performance of the Russell 2000, which represents small cap companies, compared to the S&P 500. The Russell 2000 itself is catching up to the performance of the S&P 500. The reason for this is the shift from growth to value. In particular, we're seeing the rise of value as a result of, one, the fact that we're seeing vaccine optimism, which is helping the services industry in particular. And the main thing that's driving the markets is the fact that they're thinking that there might be a world where the pandemic is no longer occurring. And this is helping many of these services companies perform even better. We're seeing financials pick up their performance as well. And another thing we're seeing is the increase in fiscal stimulus optimism as well. Well, one thing in particular in the House is they're working towards a compromise for a $908 billion coronavirus bill. And it's to be seen if this will come out before the election or not, but it's still driving the market sentiment even further. The best case scenario for the markets is we get a stimulus bill that comes out, and then the vaccines come out to their due date. I know there have been some vaccines, such as Pfizer, that have announced that there might be issues within their supply chains, but if they're able to get that figured out, that could help drive the markets even further up. Now, going into some other economic data points that I've been following, the U.S. jobs report came out on Friday, and what it showed was a slowdown in the economy itself. And this might be due to the fact that we are not seeing a stimulus bill in effect right now. The stimulus bill has to come in as soon as possible, or we could see a potential double dip recession, according to some people within Congress. So Congress understands how important it is to have a coronavirus bill that comes out as soon as possible. So they're doing whatever they can to get this $908 billion bill through. And another thing to keep in mind is the unemployment rate fell to 6.7%. While this didn't meet expectations, it wasn't the worst number in the world. So the major thing to keep an eye on is the stimulus bill. Now, going into the US dollar performance, now the US dollar has fallen over the past few weeks as a result of the momentum within the stimulus bill, as well as the fact that within the United States, coronavirus cases are continuing to rise, and there's which doesn't necessarily impact the markets themselves, but it's impacting the US dollars just because there's the concern that the United States might underperform other countries as a result of increased coronavirus cases. And as a result of the decline within the US dollar, we've been seeing a rise in the price of gold. And with increased stimulus, there are also increased inflation expectations. And along with increased inflation expectations, you can see gold continue to rise, as well as bonds performing worse as well. So you saw bond yields increase, and we saw a slight pullback in bonds themselves as a result. when yields go up, the price of bonds go down. So the fixed income market isn't performing as well as a result of the worsening inflation outlook that we're seeing. Now, going into the price of crude oil, we actually saw crude oil rise over the past few weeks as a result of vaccine optimism, leading to the fact that there might be increased demand in the future, as well as the fact that the OPEC and Russia is expected to meet next week, and there's the expectation of deep oil output cuts to help drive up the price of oil. So we could see the rally within oil continue over the next few weeks. Now, something I wanted to keep in mind is the fact that we're seeing the fear greeting index increase significantly. So many investors are very bullish right now. And I just wanted to remind everyone to make sure that you're hedging your positions, whether it's if you're trading all calls, for example, try to make sure that you're also holding puts within your portfolio, and make sure you're not over leveraging yourself. Don't put more than 5% of your portfolio into one specific position. Try to diversify your holdings to make sure that, say, the market does see a large drop, then you're still safe as a result of your diversification and your hedging as well. And the VIX term structure is now in contango, which shows that investors aren't worried about an imminent downtrend in the markets. We're seeing election certainty, vaccine optimism. The major thing that could shift the market right now is if we see any further issues within the supply chain for the coronavirus vaccine, or we see pushback in the fiscal stimulus bill. And if we see a pushback there, then there is the possibility that we see another double dip recession that many people in Congress are talking about. Another thing to keep in mind is Janet Yellen was selected as Treasury Secretary, which means that many of the facilities that were created back in March will continue to be in place. And that means that will help the markets even further, could rise inflation expectations slightly. But the major thing to see is what comes out of the fiscal stimulus bill. Now that wraps up this today's episode of Eagle Investors Market Recap. Make sure, if you haven't, subscribe to the YouTube channel, ring the notification bell, and if you aren't part of the Discord server for Eagle Investors, make sure to join. You can join for a seven days completely free, no strings attached, and you can gauge what our server does. We post alerts daily and hourly as well. And we also post different content as well. So make sure to check us out. And if you have any other questions or feedback for the videos, feel free to leave it in the comments below.